Imagine you spent 14 years building a bridge, every bolt, every cable, every support beam engineered to last a century. But nobody was allowed to drive on it, not because it wasn't ready, because there was no road leading to it yet. That's the exact situation Xrp and Stellar are in right now, and here's what nobody is talking about: the road is almost finished. What's going on, everybody? Welcome back. If you're new here, this channel exists for one reason: to cut through the noise and give you the information that actually matters in this market. Hit that subscribe button because things are moving fast and you do not want to miss what's coming. Today we're unpacking three massive developments that, when you connect the dots, paint one of the most bullish pictures we've seen in years for Xrp and Xlm. We're talking about Stellar's landmark move with the DTC, why the Clarity Act isn't just nice to have, it's the ignition switch, and why one of the most legendary names in traditional finance just quietly admitted that blockchain will replace financial market infrastructure. Not might, will. Buckle up, let's get into it. Let's start with Stellar and the DTC partnership, because I think the majority of people in this space are looking at this story and seeing only the headline. Multi-trillion-dollar tokenization deal. Big number, bullish, move on. But that's the shallow read. Here's the deeper read. The DTC, the Depository Trust and Clearing Corporation, is the backbone of American capital markets. Every stock trade you've ever made, every bond settlement, virtually every securities transaction in the US has touched the DTC. We're talking about an institution that processes quadrillions of dollars annually, not trillions, quadrillions. For the DTC to select Stellar's network, not Ethereum, not Solana, not any of the darlings of retail crypto, tells you something profound about what serious financial institutions actually value. And here's the word that keeps coming up when you dig into Stellar's infrastructure: compliance at the base layer. Think about what that means. Most blockchains were built with the philosophy of decentralize first, figure out compliance later. Stellar flipped that. They built regulatory considerations into the architecture from day one. That's not a bug, in the eyes of institutional partners. That's the entire feature. The Stellar CEO put it in a way that I think deserves more attention than it's getting. She essentially said, "We built for a world that didn't exist yet. We anticipated what institutions would need before institutions even knew they'd need it." And for years, she's talking 14 years, they were building in the dark. No customers, no regulatory green light, just the conviction that when the moment arrived, they'd be ready. That moment is now arriving. And here's what I think is the real signal from this DTC story. This partnership isn't just about tokenizing assets. It's a proof of concept for interoperability, the ability for traditional financial rails and blockchain infrastructure to speak the same language. That's the holy grail, and Stellar just demonstrated it works. Now let's talk about the Clarity Act. And I want to use an analogy here that I think will make this crystal clear. Picture the iPhone in 2006. The technology existed. The components were there. Engineers had been working on touchscreens, mobile internet, and app ecosystems for years. But until Apple put it all together in one device and AT&T agreed to carry it on their network, nothing. The technology sat in labs. The moment those two things aligned, it didn't just change phones, it changed civilization. The Clarity Act is AT&T's network deal. Xrp and Xlm are the iPhone. Right now, the commodity classification that Xrp has received from the SEC and CFTC is meaningful. Don't misunderstand me. That legal clarity matters enormously. But a commodity label alone doesn't open the floodgates for institutional capital at scale. Here's why. Banks, pension funds, sovereign wealth funds, they don't move on regulatory interpretations. They move on federal statutory law. There's a fundamental difference between regulators think this is okay and Congress has passed a law saying this is explicitly legal and here are the rules. The former creates hesitation. The latter creates acceleration. Senator Cynthia Lummis has been sounding the alarm on something that goes beyond just crypto innovation. She's framing this as a geopolitical issue, and she's right to do so. If the United States fails to establish the legal framework for digital asset markets, other nations won't wait. The financial architecture of the next 50 years will be written by whoever moves first. And history has shown repeatedly that America loses ground in industries it refuses to regulate intelligently. Look at what happened with early internet policy. The US moved decisively to enable e-commerce, protect online platforms, and create a legal framework that allowed companies like Amazon and Google to scale globally. That wasn't an accident, that was deliberate legislative strategy. The Clarity Act represents the same fork in the road for digital finance, and for Xrp specifically, this matters at a level that goes beyond price speculation. Xrp was engineered from the ground up for one purpose: institutional liquidity and cross-border settlement, not retail trading, not speculative holding, institutional settlement at scale. But no bank's Treasury Department is going to sit down and write a policy to use Xrp for trillion-dollar settlements without knowing exactly what legal framework governs that asset. The Clarity Act is that framework. Without it, the pipes exist but nobody's allowed to turn the water on. June is looking like a potential markup window. Watch this space very closely. Now I want to get into something that I think the crypto community consistently misinterprets and it costs them understanding. Every time Jamie Dimon speaks about crypto, the headlines go one of two ways. Either Dimon bashes Bitcoin or JP Morgan CEO turns bullish on crypto, and both miss the point entirely. Here's what Dimon actually believes, based on everything he's said publicly across the last decade. He is completely sold on blockchain technology as the future of financial infrastructure. He has been for years. JP Morgan has invested hundreds of millions of dollars into their blockchain division. They have a deposit coin. There. Moving client money on blockchain rails right now, today. What he has never been sold on is the idea that speculative cryptocurrency tokens are inherently valuable, and honestly. His skepticism there is intellectually honest. It's the right question to be asking. But here's what's interesting. When Dimon talks about Fedwire running 5 days a week, 10 hours a day, and says why not 6 days a week, 20 hours a day, he's not describing some distant future. He's describing infrastructure that blockchain already makes possible today. He's acknowledging that the current financial system has artificial constraints that blockchain eliminates, cross-border payments that cost too much, settlement windows that are too slow, market hours that limit access. These aren't mysteries, they're legacy problems with known solutions, and the solution runs on networks like Xrp and Stellar. Now, the crucial question that the market hasn't fully priced in yet is this. When institutions like JP Morgan fully commit to blockchain infrastructure, what's the access mechanism? You don't get to use a blockchain network for free. You access it through its native asset. That's the mathematical reality that people like Dimon will eventually have to reckon with, and smart money is positioning before that reckoning happens publicly. Here's where I'm going to give you my honest take, and you can agree or disagree in the comments. We are approaching a moment in crypto market history that is genuinely without precedent, and it has nothing to do with Bitcoin having cycles or macroeconomic liquidity or any of the traditional frameworks that crypto analysts have used for the last decade. What's coming is a fundamental bifurcation of the crypto asset class. On one side, you have assets that exist primarily as speculative instruments, tokens that track Bitcoin, that rise in bull markets and collapse in bear markets, that have no meaningful institutional use case, that are one bad news cycle away from irrelevance. On the other side, you have a handful, and I mean a handful of assets, that are becoming embedded in the actual infrastructure of global finance. We're talking about projects where major financial institutions, central clearinghouses, and sovereign entities are building on top of the network, where the token isn't just a speculative bet, it's a functional requirement for operating on infrastructure that processes real economic activity. The assets in that second category are going to stop trading like crypto and start trading like financial infrastructure stocks, utility-driven. Institutional bid, decoupled from Bitcoin sentiment. Xlm's price action right now moving against the broader market trend, sustained by real institutional news, is the first visible tremor of that decoupling. And Xrp, with its chart setting up for a potential major structural move, may be setting up to follow. This isn't about picking winners in a casino. It's about recognizing that a small number of these networks are graduating from speculative asset to essential infrastructure. And that graduation, when the market fully prices it in, represents one of the most significant repricing events in financial history. So here's the summary, and I want you to really let this land. Stellar just proved its technology works at the institutional level with the most important clearing institution in American finance. The Clarity Act, potentially weeks away from markup, is the legislative key that unlocks full institutional participation, and the biggest names in traditional banking are publicly acknowledging that blockchain will replace legacy financial infrastructure. These aren't independent headlines. They're chapters in the same story, and that story is entering its final act. Drop a 1 in the comments if you believe the Clarity Act gets signed before the end of 2026. Drop a 2 if you think it gets delayed. I genuinely want to know where this community stands. If this breakdown added value to your thinking, subscribe. And hit the bell. We do this every day and we are just getting started. See you in the next one.